The first pair we will be deliberating on today, as usual, is going to be the US oil. And if you remember yesterday, we had a perspective that we were looking out for in the form of a breakout of the key level, a retest of the 102 key level to take advantage of that bearish momentum, which never happened. We were expecting this to happen before we see that bearish momentum, but that never happened. However, we were able to see a breakdown of the structure at $98, $99 area, and a retest of that structure, which sent price crashing into the take profit target zone we identified yesterday. If you had taken that opportunity yesterday, kudos to you for doing that. However, for those who have missed out on this opportunity, how do we intend taking advantage of a potential momentum as we head into the New York session? So, well, the first thing I want to be doing, let's just first of all clear this area, as this is no longer relevant at this point, as we have already gotten this achieved. So how do we intend taking advantage of any potential opportunity lining up for us? So one thing I'm looking at this bearish momentum that kick-started the early hours of this morning, I'm thinking this movement is going to head into our potential demand zone at around the $90.50 mark, after which we might be seeing a possible bullish potential from this area. However, since we have this structure now, how do we take advantage of that move when it finally happens? Well, the first thing I want to first of all say is this. Remember, we do have a key level at the $97 mark, which has been holding price action resisted. If you can see, we can see what happened in the past here, where as soon as we saw the breakdown of that level at the $97 mark, we saw how price action has been, this area has been a supply niche for participants in the market in the past. You can see, then it became a demand zone here, then it became another demand zone here, and right now we have a breakthrough of the structure at this point. And we all understand that from a technical perspective, if we see a breakout of or breakdown of structure, we expect price to do a retest of that structure with the intention of moving in the direction of the prior leading price action. In this case, we have the prior leading price action here is more or less a bearish drive, and we want to be looking of how to take advantage of that bearish move as we head into the New York session. So what we want to be looking forward to at this point is to look for a possibility of price coming back into doing a retest of that structure, which patterns on lower time frame that will support a trend continuation to the downside from here. So this is what we might be looking out for as we head into the New York session, so that we can join that bearish momentum. It is advisable, it's not advisable to join right now, as we want to wait for confirmation. Remember, we don't get too excited at the sight of a signal. We want to wait for the confirmation to come in, after which we will take advantage of that move to the downside from there. So if that happens as projected, we should be having around 500 pips to catch if price moves the way we have projected at this point. So this is the first scenario I'm looking out for at this point, and let's see how price action is going to play in that regard. The other scenario we shall be looking out for at this point is the possibility that a bullish momentum could actually come in. And that bullish momentum can only come in if we see a significant break above of that key level at $97 mark. So what I'm saying here is this: if price comes back to the key level, and one way or the other we witness a breakout of that key level, then that should give us a signal that there is a possibility that price will be going to the upside from here. So what we want to be doing at this point is to wait for confirmation in the form of a retest of the structure around the key level area, the $97 mark area, with patterns on lower time frame that supports a trend continuation. So it could become in the form of a double bottom structure or whatever reversal pattern it comes in, and then we take advantage of a breakout retest of structure to push price to at least the $102 mark around this area, which will probably dovetail into I think around 450 pips minimum to catch here if price moves in that direction. So we have two scenarios here on the US oil. So we want to wait for price action to come back into the key level at $97 mark, where we want to be taking advantage of a bearish momentum if we sight a reversal pattern or a rejection, multiple rejection of the $97 mark. We take advantage of that move into the potential demand zone we identified around the $91 area. However, if price breaks above the key level at $97 mark, a retest of that structure should definitely send price going to the upside from here. So this is what we are going to be looking out for at this point. And at the same time, it is important that I also give a perspective into the poly add into I want to add um a caveat into the bullish potential that we are looking out for on the US oil, and that is this. If we look at this, if we look at what happened since price rejected that demand zone on the 14th of July, we saw that we have a potential an impulsive move to the upside, and this could probably be a retracement of that impulse leg, which could send price going to the upside from here. So one thing we want to be looking out for is if price breaks above that key level, then we want to be looking for that bullish potential that that might be a trend continuation of the previous impulse leg here. I hope my explanation has been clear enough. If you seek further clarification, feel free to drop it in the comment section so that I can shed more light in that regard. So I'll be taking the 10-15 seconds off right now